Today is April the 5th. It's a Saturday and the markets are closed. Thank goodness. The market cannot go down on Saturday. But I've been having an interesting debate with some folks who are pushing back on my theory that this is a third wave down, and it might not be. It might be the second wave down. I count this the second wave there. Then we had that little bear wedge pattern, and then the subsequent sell-off. But they're saying if I go back here, I can show you they're saying this is just a flat base pattern, which is true. This is a flat base, and this is leg one, and this is the leg two, which we've had, last week, which was, I'm going to get to it in a minute, but I just want to point this out first. And that the Nasdaq had this flat base pattern from December 16th to, I don't know what it was, February 14th, yeah, Valentine's Day, something like that, where it made that high. Okay, February 18th. So that's just a flat base. This is leg one, the bear wedge pattern, then leg two. It doesn't really matter. We'll know eventually, like I always say, I'll let you know when it's all over. I'll just say that during this correction here from December 16th to January, the middle of January. It was a 7% correction, which it doesn't sound like much, but I always go back to the leading stocks. What are the leading stocks doing? The leaders of the last, rally, which is MicroStrategy, probably the biggest leader of them all. What had already topped, prior to that December 16th. So it was showing signs of, destruction, deterioration. This is CLS, which was a big winner. This one topped on February 5, which was prior to, the I just showed you the Nasdaq, which was December, excuse me, January 18th. This is CrowdStrike, a big winner in the cybersecurity space. This thing topped with the Nasdaq on the 18th. And so, that might be the first leg down the bear wedge. Now the second leg down for CrowdStrike, which is certainly a leader in the cybersecurity group. Broadcom, a leader in the semiconductor group. This thing topped and then, had I don't know what you call a double top. But anyway, it peaked prior to the Nasdaq crashing. So during this time where the Nasdaq had this, what I believe was the first leg down, a lot of these leading stocks had already crashed. This is the January 27th shot across the bow, which a lot of people didn't pay attention to, but certainly these stocks got hammered, 30% in a day. And this thing topped on January 23rd. So if we go back to the Nasdaq, a lot of these leading stocks topped prior to this second leg down, which I consider the second leg down, which was February, pretty much 3 weeks later. So leading stocks always give us a signal or a sign of, if leading stocks are cratering, and I continue to say there's no leading stocks to buy, so there's no rally. You can't have a rally without a leading stock. Anyway, I just wanted to point that out. Like I said, I believe we're in, a bear market. Obviously, the peak to trough correction here from this date here to the low on Friday is 23%. Okay, that's a significant loss, a destruction of an index. When an index loses nearly a quarter percent, this is a 23%. Can I write 23? I don't think I can. 23%. You get the idea, right? 23. Michael Jordan's number. Anyway, it's a big sell-off. Friday, it was down 962 points or 5.82%. The volume was massive, 41%. And if you go back to the prior day, it was down on that day. I think Friday was worse actually than Thursday, and everybody thought Thursday was miserable. 5.97% and 5.82%, but the amount of stocks that were down were greater on Friday than on Thursday. So there you have it. The Monday, I'm going to just go through the week here. This is a weekly review. Monday, we had this pink rally day where we really saw this bear wedge pattern break down, and it hit a low of 16,854. rallied back up and closed near the high of the session. And then on Tuesday, it was up 150 points. On Wednesday, it was up 151 points. So we're looking for a follow-through day here to move through these moving averages and rally back to the 200, which at this time it was only 4.6% below the 200, this black line here. So you're thinking, oh, it's rally time. Let's have a follow-through day. And then the president announced the tariffs, and it was not well received, to say the least. Down nearly 6% on Thursday and another nearly 6% on Friday. So let's take a look at the week. One of the greatest weekly losses in the history of the stock market, certainly the Nasdaq, which has only been in existence since 1971. Yeah, this is extreme severe damage, down 10%. And I always say when your index is down 10%, the Nasdaq, your growth stock's going to be down 2 to 3 times that. So if you're holding your growth stock and it's down 20 or 30%, that's a lot of pain. I don't know why you're holding in this market. A lot of the folks at mcstockcharts.com went to cash. So everybody wants to know, when do we recover? Where's the bottom? Nobody knows. I have pointed out in past videos some, areas of support, 15,708, which I've got to give you the low, right? The low on Friday was 15,575, which is, like I said, 23% from the low of December 16th, week of 20,204. Your next area would be 15,222, which, this is a news-driven market. The news obviously was not well received. It could change over the weekend. It could change both ways. Like, you could have more countries come out and say, we're retaliating with tariffs, and that would drive the market lower. And I think that's a real plausible scenario for Monday. And the US could lighten their stance, but I don't think that's going to happen. So I think that obviously the danger, the risk is to the downside here. You don't want to be heavy in this market. But the next level would be 15,222. Do we get there? I don't know. And then after that, I would say 14,446. 46. So there's a couple of levels to look at here. But definitely the momentum is down to the downside. Obviously, these little inverted hammer candles indicate more selling ahead for the index. And here we're back on a daily chart, and there's your 15,222, which is, about a year ago. So, you think, oh, this is bad. We've lost, nearly a year's worth of gains, but the SPY has already lost more than a year's worth of gains. There you see up here, it was 518 back in April of 2024, and it closed at 505. So I didn't give you the distance between the I'm screwing up this morning. It's too early. I need to have my coffee. The distance between the index where it closed and the 200 is 15.5%. It has not been this low since the bear market of 2022, maybe the summer, June of 2022. So we're in real historical times right now. All right, I'll go back to the SPY. The SPY's lost, like I said, years worth of gains, and then some 12% below its 200. And then the RSP. So you think this is a weekly review. I'll go to the weekly. Last week, the SPY was down only 9%, while the Nasdaq was down 10%. And then the RSP, this is the equal weighted 8.5%. So that tells us that Mag 7's getting hit a little harder than the other 493 stocks in the index. And I guess I'll just go to the Dow Jones Industrial Average, which was down nearly 8% last week. And then the Russell, which got hit pretty hard, it was down 9.6% last week. How far is this below? 17% below the 200. So, and you can see the death cross here where the 50 crossed below the 200. So, in the big volume here. So probably, more downside for this. If you want to play the short side, TZA is a bear, 3 times leveraged, vehicle that you can use. This looks like a breakout. with volume here on this one. So a lot of people are going to the TZA, or just putting option puts on the market. As this news flow has been really negative, the market has gone down. So these inverse um, exchange traded funds are breaking out to the upside. This is SQQQ, which is 3 times the inverse of the Nasdaq 100 index. And this looks like a breakout as well, up 18.5% on Friday and 31% for the week. So that's a good week for the shorts if you're on the short side. Anyway, I'm just going to provide some reference this morning because we do need reference. Cooler heads need to prevail. People are just losing their minds. And what happens in a downturn is it presents opportunities. I'll just go back to, first of all, I'll go back to the 2018 bear market, which is kind of similar when we had this trade war with China and Trump wanted Powell to lower rates, and he was raising rates in this market here in 2019, the end of 2018, the beginning of 2019. Pretty similar type of political backdrop here. Had these three legs down here in the 2018. It's called like the taper tantrum. They were tapering, and then Powell, I think it was Christmas Eve, decided to give us a Christmas present. And then the market rallied. So, you had to endure this downtrend to enjoy, the uptrend. And maybe we get something like this. I do believe that you have to be vigilant, that there are going to be some counter trend rallies. They're going to be sharp. I'm not saying it's going to look like this, but this is just for reference. Precedent analysis can be beneficial. And I want to go back to some stocks here because I'm a stock guy, not a index guy. But if you look at NVIDIA from, I'm going to go to today's market, because people, it's NVIDIA, the trade is over. To me, the AI trade, it's kind of like the internet boom and bust in 2000. When it's over, it's over. Don't sit there and hang on to NVIDIA and hope that it's going to come back to its former glory. But I do want to point out during the bear market of 2022, NVIDIA traded at a low of like $10. Okay. So if you were vigilant and watching, AMD and NVIDIA turned on the same day. It was October 13th, 2022. And if you bought it at 10, this thing turned out to be what, a 15 bagger, in 2 years, it was up to 152. So from 10 to 152, those are the types of opportunities that will present themselves if we just pay attention to stocks. I am searching stocks that are growing, market share, sales and earnings growth. They're taking market share, they're executing, but their stocks are plummeting, and they are likely to be rewarded in the next uptrend. I think the next uptrend are not going to be your AI stocks, your NVIDIAs and your Teslas. I think you got to look around at some younger, leaner, meaner stocks that are taking market share. I mean, at 3 trillion, this thing was, it's had it, and now it's down to 2.3 trillion. It's still, it's a big company. You're not going to get a 515 bagger again. So I think you got to just look around. There's NVIDIA on Friday. I was looking at that 100 level and it definitely crashed below that. So anyway, NVIDIA topped, like I said, it hit that 153 on January 7th. So, the leading stocks, they deteriorated prior to the index, and that's typically the way it happens. I want to go to Tesla, another stock I'd mentioned earlier. This one topped at 488 on December 18th. Like I said, whenever politics enters my investments lose and politics wins. So it's just the way, I've been doing this a long time and it's been that way every time. Very consistent pattern for me. I lose money when the politicians get involved. So the CEO got involved in politics and the stock has been really hurting. Meta platforms, but that's not the point here. The point is that it topped prior to the index topping. There's a Meta. This topped with the Nasdaq. So that was on Valentine's Day. Google topped earlier, and the Mag 7s all have topped, prior to the index or on the day of the index. This is February 4th. when Google topped, excuse me, Alphabet at 207.05 on February 4th. So the leading stocks are the indicators here. Amazon, same thing. February 4 was D-Day. That was the high, and then it's been downhill ever since. So these Mag 7 stocks top prior to the Nasdaq crashing, for the third leg down or second leg down, whichever way you want to perceive it. I'm fine either way. I'm fine either way. I just take things one day at a time, and I believe now that we're in this type of a, cascading downtrend, you're going to have to exhibit patience, and patience is not very prevalent in today's society. So I think those who can exhibit patience will be rewarded best. And so I'm just telling you, you got to be patient here during this market. So I showed you, the 15 bagger in NVDA that, those are the possibilities that will be available to us if we're patient. And the stocks that topped prior to the Nasdaq, which was an indicator that the leading stocks are rolling over and that we're due for some type of correction, which we're getting now. All right, that's all well and good. Okay. But I do need to point out some other things that happened last week that I think are significant. I'm going to start with the gold stocks because the gold stocks have been working. Not every day I've been posting the gold stocks trending, trending, and they trend until they don't. This is AEM closed below its 50 on Friday. I'm not saying the gold trade is over, but this is some severe damage here. And it's uncharacteristic of what they have been doing. Down 7.5% last week, 10% already off its high made on Thursday. So it ramped up on Thursday and then reversed Friday. So beware of that. It's got that inverted hammer candle where it, closed near the lows of the session there. AU is another one of these gold stocks, and they're all pretty much the same. It's just the level of where they're at in relationship to their 50. Some are below it, some are above it, but they all crashed hard. This is AU down more than 9% on Friday. Gold, every stock, I had four stocks on my ready list last week. They were doing great until they weren't, and they got crushed. This is GOLD down nearly 8% last week. It was up until Thursday when the markets took a dive. RGLD, they all look the same. I mean, all of them, just like I said, the difference between their relationship to their 50. Royal Gold doing a little better. It's a 3.1% still above its 50, so that's not bad. And then the last one I'm going to do because it's the same thing. It's just redundant. Wheaton Precious Metals, another Canadian gold mining stock, down 10% on Friday. So that's a lot of pain to suffer because it was at 80 on Thursday and 70 on Friday. So that's you know that's like a 12% loss or 13% drop. So that's a lot of pain. So that's why you got to be careful. And then why I said most of the people at MC Stock Charts are in cash. I have a 5% position. That's it because I had such a good entry price on TGTX, but that's the only thing I'm holding now, and it's very small and probably still going to get hurt just holding small. All right. Another group that I've been, highlighting here in my videos because they're the only group showing strength is insurance. These things got hammered, hallelujah, on Friday. Brown was down nearly 8% and traded down to its 50. Not a good week there for Brown and Brown, BRO. Ryan is another stock that was looking good until it didn't. And this is the type of action that you're going to get in a bear market. I mean, they're going to get everything eventually. I keep saying this, there's no place to hide in a bear market. This is PRG Progressive Holdings, and then Aflac. This is one that I had on the ready list. Doing good until, oops, it wasn't. Man, this thing really took a crash on Friday, like a lot of things, down below its 50. Man, down 7% on the week. So even in the defensive names, now they're selling these, which to me is good. There's no place to hide. They're selling everything. You look for some capitulation, selling some, massive volume, which we got on Friday, but I still don't think we're out of the woods yet. So anyway, People were hiding in Uncle Warren's bunker, but this thing got hit with some shrapnel, maybe a couple hand grenades. The bullets are flying. Uncle Warren, no longer providing that safe haven bunker for investors, as this was down 6.2% last week. So there's no place to hide. And just better get over that fact. Don't think that you're going to go long in something and it's just going to rip higher, because it's not. It's going to go down immediately. If you traded last week and went long stocks, you probably got stopped out pretty darn quick, I would imagine. So that's feedback. That's telling you to stay out of the market. You're going to get all these little finger cuts, right? It's like putting your hand on the stove and getting burned. You're not going to do that again. And that's why I provide a post analysis checklist to see, if what you're doing wrong. What you're doing is you're buying in a downtrending market and going long when everything is short. And so you're going opposite the trend. It's like a fish swimming upstream. And anyway, I don't want to get too negative on all the carnage in the market. I do want to look at stocks that I believe can do well going forward. I'm creating a video here. I've got about 20 stocks that I like. I'm going to narrow it down to like 10. But there are some stocks, and I look at essentials that are doing well, and I think drugs are one of the essentials in this day and age. We need our medication. The boomers do to function properly, or they just the drugs are not going away. And so the food, energy, and drugs are three areas that people need to survive. And Gilead, yeah, it was down 4% last week, but and it's 10% off its highs. But remember, the Nasdaq was down 10%. So being down 4% is outperforming the market. I'm not saying go out and buy Gilead. I'm just acknowledging this thing's holding up pretty well. A lot of the drug names here that I like are holding up pretty well. They'll probably get hammered next week as I say that, but down 6.5%. Catalyst, not bad considering the overall market, which is pretty rough, folks. Pretty rough. Like I said, historically rough. SLNO, they have a drug coming to market this month. You could see the gap higher on the news. It held its gains and it formed like, a short stroke pattern here, where I believe the high was just a tick above the prior week's high. Yeah, 73.97. Then last week's high was 74. I'm going to say that's a short stroke pattern in Spirit. It was up 47%, then gave back six, so I'm going to call that a short stroke pattern. I'm going to watch that one for sure. I just think there's a lot of drug stocks that are pretty exciting with new drugs, new products taking market share. Corcept Therapeutics, I believe on Monday came out and then sold off, but it was up a lot on Monday and then sold off, but still up 36% on a week when the index is down 10, had a historically bad week. And that's showing me relative strength. A couple of others that I'm looking, TGTX, I mentioned this earlier. This is the one that I'm holding, probably going to get slaughtered in this one, but I got such a good price on it. I don't want to sell it, but I can't stand to see it go down, down, down. So I pared it from 15% to 5, which hurts me greatly. But you got to be wise in a market and protect your capital and live to fight another day. So this one was down on the weekly here. It was down 6%, not bad compared to the index being 10%. It's 14% off its high. Yeah. They're going to have some catalysts coming up here because they have the presentation on Monday, and then they have the KOL, the key opinion leaders coming up in the middle of April, and then earnings coming up beginning of May. And this is the thing about I'm watching for, and this is one of the 20 stocks that I'm looking at. I'm just looking at this sales growth. You go from 63 to 73 to 83, then 108. So I'm interested to see this quarter. If they go to like 130 or 140, this stock's gonna, I believe, pop even in a rough market, because that is just phenomenal execution and sales growth. Anyway, some other names that are showing relative strength. I'm not saying go out and buy these at all. I'm not saying that at all. I'm just showing you strength. This is McKesson. This is a medical drug supplier. You can see the group is number one, overtook the gold stocks. Anyway, it consolidated in a base and making new highs up 2.25% in a historically bad market. I mean, this thing's flat, neon lights flashing relative strength. So that one looks pretty good. I did mention food, Kroger, which is a supermarket. I think they own Safeway, Fry's, and a lot of other supermarkets. Here you go, Ralph's, and okay. Anyway, up nearly 1% and just a horrific tape is showing relative strengths. That tells me something. BJ's another one. BJ Wholesale Club up 3% last week, while the rest of the market, well, you know what happened. I showed you earlier. But yeah, this is showing relative strength. Will they get to this one too? Probably. But for now, I'm just showing you relative strength. And these ones are showing Coca-Cola, Warren Buffett. You can't hide in Buffett's bunker, but you could buy Coca-Cola, and it was flat on the week, down less than 1%. You could see this cup with handle tried to break out, but this market is not for breakouts at all. Anyway, just showing you some strength in some certain areas. Some folks they sent me these notes, you got to look at this one. This is doing great. Pulte Homes, it's flat on the week and it was up on Friday. This looks to me like just short covering. I mean, the shorts, if you've been shorting this thing, the whole way down, 149, 139, 121, 111, and now it's at 100, right? Below 100. Yeah, you cover on a weekend and then get the heck out of Dodge, take your profit. So to me, this is not institutional support. This is just short covering, and it's important to decipher and diagnose these differences in the markets here. And these stocks, yeah, maybe they bought them, maybe. I kind of doubt it, but maybe. But this looks like short covering, up 4.5% on a Friday. This group is one of the worst or the lowest, weakest performing groups. And maybe they are bottoming, something to watch. You can see the relative strength line heading north, but to me, it's just way too soon. And just, acknowledging the move is fine, but yeah, I wouldn't be, just jumping in here. This is Builder. It was flat on this session. And yeah, I just acknowledging, yeah, it was up 3.5%. So my buddies, I'm saying, yeah, okay, I see you, but I'm not jumping in here. This could be the start of a new uptrend, but I'm not ready to declare that just yet. Anyway, at mcstockcharts.com, we thank you for watching and never give up. In honor of the great Steve Jobs, I do have one more thing, and that is I mentioned that this is a news-driven stock market, and the news has been negative, obviously, with the reactions. All you have to do is go to the Nasdaq and say, what was the reaction to the news? Well, I think it was pretty bad. Yeah, like I said, down 10% last week. So that's a pretty negative, historically negative reaction. But I mentioned the news because Nike got some news and bounced on Friday, probably some short covering, but the news was that Vietnam and that, they're zero tariffs, they're acquiescing to the US. And a lot of our shoes are made in Vietnam, and Nike makes a lot of their shoes in Vietnam. So it's spiked on the news. Is this a sustainable move? And this, bullish engulfing candle here on Friday? I don't know. We'll see. It's got a lot of gaps to fill here in its chart. On the way down, this thing really cratered. The low there was a 71.52, and then their low here was 64. It's at 57. So maybe it does fill these gaps here. But my point is that it's a news-driven stock market, and the news was positive here on Friday, where the president said Vietnam is acquiescing. So there's other stocks in this group. I mean, all these shoe stocks, had a nice day on Friday. This is Crocs back over 100, up nearly 5%. Decent volume here. This has got a gap to fill way back here at 135. Skechers, they have a manufacturing plant in yeah, they have a huge one in Southern California, but this one was up 2.5%. Deckers is the one I wanted to show. Deckers is another leader that topped, definitely the leading stock in this group, topped on January 30th before the Nasdaq did. And it's been down, I believe, 10 weeks in a row. Yeah, look at this. And look at the selling here. The CEO left in September or October of 2024. He knew what he was doing. 54-year-old CEO had been there only like 6 or 7 years. He got out. And now the new CEO has to endure this. So it's 52% off of its high. And remember that the former leading stocks, 80% of them go down 50%, 50% of them go down 80%. You don't want to be holding this when it goes down to 80% anyway. Oh, and the other one is ONON. This is people think, oh, it's a Swiss company. They make their shoes in Switzerland. No, they're made in Vietnam. And it was down 10% last week with the index, but on Friday it ramped 5%, had this bullish engulfing. So I'm looking for these and see if we can get these you know, maybe a bottom here and running back higher. Haha. Anyway, that's it for me. Thank you for watching. Hang in there. Be patient. The name of the game now is just to be patient. Don't be hasty and want to jump in right away and make your millions in one day. You're not going to get rich in a day. It's going to take time. The market will reveal itself. The winners will reveal itself. I know I scan every day. So when the winning stocks start to rebound and start to show strength, we will definitely identify them and have them on our leading stock list and have buy points for them. So just be patient, hold on. It's a good time to go hiking, biking, swimming, golfing, whatever you do. If you like to, whatever you like to do, shoot bow and arrows, I don't care. It's a good time to have a hobby. Keep your eye on the market, keep one eye on the market, and keep one eye on your, family, your children. Hug your family, your significant others, and live life. And this too shall pass. Anyway, at mcstockcharts.com, we never give up. Thank you for watching.